Hi there, this is Dennis Wells, and welcome to your weekly market update for February 27th, 2026. And we had new data this week from Case-Shiller Home Price Index showing that housing prices did dip slightly month over month in December before the seasonal adjustments. But after adjusting for the normal season trends, prices actually did rise a solid 0.4%. And nationally, we see that home values are up 1.3% from a year ago. The FHFA, which does keep track of housing values on homes that have conventional mortgages, did also show a modest monthly growth and prices that are up 1.8% year over year. Now, while both of these numbers are down from both the historical average of 3% yearly appreciation on homes and well off the highs that we saw post-pandemic, it does refute the idea that the housing market is going to crash. And so, what is driving stability in the real estate market today? In a word, affordability. What we are seeing is a convergence of several things. Number one, the spread between the 10-year Treasury and the interest rates on mortgages has shrunk to more historical level. Uh, it was exacerbated for a little while because of volatility in the market. The stability in the market has allowed that to shrink to where it really probably should be, which has brought interest rates on mortgages down into the low sixes. Also, wages are up year over year, and mortgage rates have held steady for a few months now. So that does give buyers a chance to get started in the process and not get started and then rates go up and then they don't qualify for anything again. Also, what we're seeing is that builders are still remaining cautious. Bringing new inventory online takes time because obviously they have to pull permits, prepare, and actually build houses. So when demand improves and supply stays steady, then home values tend to remain supported and potentially even increase a little bit more at a more rapid pace. Looking ahead, several economists surveyed by Fannie Mae and Pulsenomics are projecting about 15% total home price growth over the next 5 years, which is really in line with that 3% per year. So, on a $500,000 home, for example, that's roughly $75,000 in potential appreciation, reinforcing real estate's long term wealth building potential. Now, when we look at inflation, wholesale prices did rise faster than expected in January, and core prices, excluding food and energy, did jump 0.8% for the month. In the labor market, initial jobless claims remain low at 212,000. However, the growth of gig and contract work may be influencing the data as some displaced workers turn to freelance roles instead of filing for benefits. They can make more door dashing or Grubhubbing or Ubering than maybe they could on unemployment. However, what we see is that continuing claims remain elevated, suggesting that when people do lose their job, it is harder for them to secure future full-time employment. So, as always, we will be monitoring these trends and watching how they unfold. And of course, if you're considering purchase or selling or refinancing your home or simply just reviewing the options, give me a call. I'm always here to help. Hope you have a wonderful weekend, and we'll talk to you soon.